Hi traders, and welcome to my video on the Elder Ray Index. In this video I'm going to show you how you can use this strategy to capture moves such as this one for over 400 pips and counting. So the Elder Ray Index is basically measuring the buying and selling pressure in a market. It's got two components, which are the bull's power and the bear's power, which you can use basically to help you generate trading signals. I wouldn't use them blindly as is. First, you're going to need to do some price action analysis, support and resistance, trend lines, keep an eye out for candlestick patterns, and as always, have good money management. Here I'm using a 4-hour EU, that's a euro dollar chart in the MT4 trading platform. You can use this strategy on any trading instrument, Forex, stocks, commodities, cryptos, indices, etc., and any chart time frame. As I said, this is a 4-hour chart. I like to trade the 1 hour, 4-hour, daily, weekly, monthly charts, simply because I find that the longer term chart frames tend to be more reliable as they contain more price data. But you can use this strategy, as I said, on any instrument or time frame that you please. So the first thing I'm going to do is look for a trend, okay? Because I'm not going to trade in a ranging market. I'm going to look for a trend. So I'm going to draw my resistance there. Okay, support here. You can see this nice wedge formation, and we have a breakout to the downside. In fact, you can go there for the breakout. Okay, so you can trade the breakout initially here. You know, you see the market is making lower highs. Okay, we do have a breakout there. This is a bit of a bull trap. Traders who are trying to buy into this trend, this sort of ran its course now, are going to get caught out, and then the price starts to move downwards. So if you're trading a breakout strategy, that would have been an opportunity to enter there. You also have a triple top formation here. 1, 2, 3 times the resistance has been touched. You've got your neckline there. That's the support within the triple top. And you have a breakout here as well. So you had a few opportunities to enter initially, but what we can do is just wait for the trend to play out, because there will be times where this will be a fake out. Price will reverse, head in the opposite direction, perhaps start consolidating or ranging. So there's no harm with so many trading instruments to choose from, just to wait for a breakout and a confirmed trend, and then a nice pullback can be an entry, which is a perfect entry there, as you can see. Breakout there, again another pullback here, trade off that ledge. You see that big candle, probably an NFP, non-farms payroll, first Friday of the month candle. Nonetheless, still good opportunities to get in on this trend. If you had gotten in up here, you're looking at over 300 pips profit. You can always place a stop loss above the highs. So if you took this trade here, you could put your stop loss here. To this one here, stop loss here. If you took this breakout, stop loss here. And of course, you can trail your position. So as price continues downwards, you can put your trailing stop above the recent highs. Just locking in profit all the way down to maximize the trend, the trade that you've taken in the trend. What you don't want to do is get excited, see these bullish, bearish candles, panic, exit your position. Granted, you'll make profit, but you're just going to leave way too much on the table. You can always re-enter, but every time you re-enter, you risk getting your entry wrong, and obviously you need to pay more brokers fees as well in terms of spreads, commission, and perhaps there'll be slippage as well. Okay, so as you can see, we managed to get some good entries into this trend here. There's another one there. It's just as easy as that. Trend going down, draw your support. Okay, that support then becomes a resistance area around here, so it's a strong level, but you can enter multiple times. You can trade on the pullbacks into this trend. Ample opportunity all the way down. Okay, see that classic breakout on a pullback in a downtrend. By now, you know, you're going to think that perhaps this will be selling too low. You don't, you know, if you've missed all these opportunities, you don't want to arrive too late to the party and sell at the low. You can just wait for the next opportunity to come. Market is starting to make higher lows here, but it'd be interesting to see how this plays out now. Okay, so Elder Ray Index. I've gone off topic a bit there, but I did want to just give you a strategy really based on price action, just to emphasize the fact that you don't necessarily need technical indicators. That being said, the Elder Ray Index. So it basically is the bulls and the bears power. The stronger the bears power, the more chance there is of a downwards market. And the stronger the bull's power, the more chance there is an upwards market. Okay, with the bear's power, when there's a downtrend, let me just get this out of the way first. You should have the bulls and the bear's power indicators built within your trading platform. As I said, I'm using the MT4 trading platform, and these indicators are both included, so I've just added them to the chart. So if you just check on your trading platform, you should have them just attached to the bears and the bulls indicators. So here we have the bears indicator. When this is low, okay, it signals that there's perhaps a downtrend. As it increases in value, it suggests that the downtrend may be slowing down, losing momentum. On the other hand, the bulls, you want the bulls, you can see is the uptrend here. You want the bulls power to be above the zero and increasing for an uptrend. And the more it's increasing, the greater the momentum, but also the higher it gets, the more chance there is of it being oversold. Okay. Another thing you can look for is divergence. So as they make lower highs, it suggests that there's perhaps a slowing down of the trend. As you can see here, that uptrend starts to slow down. And if we look at this scenario now where this trend is sort of slowing down, you do have the upwards divergence. Oops. On the bulls, yeah, it can apply to the bulls and on the bears as well. Okay, so in terms of entry, I've just pinpointed some. Let me just make more space there. I've just pinpointed some entries based on support and resistance, which I think would have been a good way to have traded this particular downtrend. That being said, we can confirm our trades with the bears indicator. So we're looking for it to be, as I said, below zero and declining. So this entry here on the breakout, you can see that the histogram there. You can see that the histogram, so this was the breakout candle, yeah? The downside, and the histogram here fell below that one. So that's strong bearish indicator. You could even wait for the candle to close for confirmation and then enter on the next one. But I would have been confident with this just based on the fact it's a breakout of a significant support level. Okay, same here, histogram falls below the previous one. You can trade on that breakout. You can wait for a confirmation, the bar to close and enter on the confirmation as well. Same here. Okay, this would have been the confirmation bar if you see the bears had actually closed in the prior candle below. So again, a good indication to take the trade. Yeah, okay, so coming along here, we had this level of support. Okay, you did see there was some divergence down to the upside, so the trend was perhaps slowing down, but there was still an opportunity that you would have been able to see just by using your, lower highs, draw your support, nice wedge formation there and a breakout to the downside. Okay, you got this bearish price action as well. And yeah, you could have taken, you can see here when the bear's power, this histogram closed below this one, there's a potential entry opportunity there. Even up here when this one closed below. So there's ample opportunity to get in the trend based on the bear's indicator. That being said, you can use support and resistance as well. If we take here this trade, in fact, the bears were losing a lot of power. You can see the fact it crossed up above zero, but then it did cross back below, which would have been another entry towards the end of this trend as we look at it now. Okay, you also see the bulls indicator starting to increase. So when that starts to go above zero, the bulls, you know that perhaps the tide is turning. Another reason why down here we'd probably avoid taking any more bearish signals for the moment. We'll just see how this plays out because the bulls indicator is above zero. Okay, but throughout the majority of the downtrend, you can see the bulls was below zero, suggesting not much bullish action at all. It could be a good way for you to find pullbacks as well. If you just look for the bulls indicator to be above zero, it will signify areas of a pullback within the trend, and then when it crosses back below, that can be used to confirm your entry alongside the bear's power indicator. Okay, so if we just zoom out, this trend here, lots of potential on this. 400 pips profit potential. How do we trade it? Well, there are many ways you can. You can trade this breach of resistance there. Okay, that actually held up a support quite nicely, following on from there. So you could have timed your entry in there. Okay, same there. You can see from this breakout candle, traders are watching these levels. Okay, you don't always need to draw your resistance lines, resistance and support flat like that. You can draw them on angles. That being said, there's a nice flat one there and a big breakout candle. By now, you don't want to be buying too high. Nonetheless, there perhaps still was an opportunity for one last rally at the top there. In fact, that breakout there, and then there was another breakout here, but you don't want to buy too high. Certainly, as you see this resistance and these lower highs, you would avoid trading and exit any position you had got in around here. Again, you can trail your stop below the low. Price moves up, below the low. Price moves up, below the low, below the low. All the way, just locking in profit as much as possible, maximizing good trades. So if we look at the bulls and the bears, the elder rate index, what do we have here? Okay, so remember, for an uptrend, we want the bears to be above 0 and the bulls to be above 0. Okay, so when the bulls, you can see when the trade started initially, the trend, sorry. I mean, fantastic if you would have picked that. That's a bit of a bear trap there. You can see following on from this downtrend here. We had a nice downtrend. However, there were sellers trying to sell here at the low. They got caught in this bear trap. We had a nice breakout to the upside. Stop losses getting taken out. Traders who were in up here exiting part of their position, exiting their positions and just causing this big upwards momentum, which we can ride to hop in the trend in new direction, as confirmed by the bulls and the bears power both being above 0. Okay. Remember, you don't want to buy when they're too high. So when the bulls indicator is up here too high, you might end up buying at the high. So you can just wait for the pullback. Okay, and then following on from the pullback, just as it starts to make higher bars, then you can look to time your entry. Nicely coincides with the breakout that we had there. Also, we've got our support level, classic wedge pattern. So it could have been a good time to look to enter. Okay, and then again, this pullback here we can see on the chart, but we can also see that the bulls indicator had a pullback and then it crossed back up above 0, gaining more momentum. So this was a signal that the bulls are gaining momentum, so the market can continue moving upwards. The bears are also, the bears power indicator is also going up, which means that the bears are losing power. So don't get it confused. The lower the bears, the better for downtrends. The higher the bears, the better for uptrend. Okay, so on this indicator, that is. So you could have used the increase in bears histograms on that indicator and also the increasing on the bulls there to help time entry into this uptrend. And yeah, here's another pullback. You can see below 0, one last rally at the top there, but then you need to start thinking about the divergence. Okay, not just on the bulls, but then the bears are diverging as well to the downside. Okay, so yeah, that's basically an elder ray index strategy using the bears and bulls. Just for confirmation, I wouldn't personally use the crossover trend. I'd be more concerned about support and resistance, but it can help you perhaps avoid, not that you're going to be buying here, but if you thought it would be a good idea to buy in this bull trap up here, and you just look and you've seen that, okay, the bulls power indicator is showing bearish divergence. It's also quite high. You know, you ideally want to enter a trend on a pullback, not at the end of it. And then the bears is showing divergence also to the downside, so the market maybe start declining. And then same principles applied over here. Different ways you can interpret it. Just keep an eye on your support, your resistance, your trend lines, candlestick patterns, and as always, have good money management. Hopefully you found something useful in this video. I do appreciate you watching. If you could please like and subscribe, that would be great. And I hope to catch you on the next one.